The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
And Money Masters and Treasure Hunters, welcome to the February 7th terrific Thursday edition of the Money Masters. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome is to help you to become a better money master and to provide you with the tools that empower human potential. Why? Because you have got extraordinary potential within yourself, folks. And when it comes to trading these markets, your human potential is incredible. I want you to be able to take advantage of all the tools that increase your probabilities of success. My mission is to help you to achieve extraordinary success. Our call-in number is 877-927-6648. Absolutely would love to hear from you. As we go take a look at these markets right now, we've got the Dow trading off 51 points, the composite down 6, the S&P's off 2.5, Russell 2000 down 2 points. You got Google up 480, Apple up 360. Popping in the markets here, it's the auto suppliers, AutoZone up $10.50. That's up 3%. It's O'Reilly Automotive that's really on the move. They're up 9.6%, up $8.90 out there. Advanced Auto Parts not too far behind them, up $5.67. That is 7.6% out there. DeVry Inc. up 20% this morning. DV is their ticker symbol. Let's see. They have a release of news out here. Let's see. What is their Q2 results beat? Let's see what they did. Net income, $56 million versus $62. Well, they didn't beat their earnings per share, 87 versus 90. What'd they do? Buy back some shares out there? Revenues, 505 versus 524 out there. Something to think about. You got to the downside, Copa Holdings, made up of a group of CPAs. Their ticker symbol, CPA out there, down $9.47. That's off about 9%. Akamai Technologies, AKAM. They're the ones really getting hammered down about 17%, off $7 right now. Bunge Limited, BG, off 6% here. You've got Green Mountain Coffee off 9%. Amazon down $4.40 out there. Chipotle, after having a strong day yesterday, down 1%, off $3 and change. Again, our call number 877-927-6648. Let's start off by taking a look at the S&P 500. Right now, trading out at 1508.68. If you are listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch this show here live, streaming live to those smartphone devices or smart tablet devices. Just go to the homepage of tfnn.com. Over on the right-hand side, you will see those three little buttons. Just click on it. This show will stream live, and you can always catch the archive of this show on Channel 10. That way, you can follow along with us. You can see the charts right now up on the screen. We've got the S&P 500. The cash index, you're seeing two beautiful 1.272 butterflies. On Friday last week was the completion of the most recent butterfly. You can see these butterflies. They're advanced leading indicator patterns. Typically, you see a market reverse from here. What we can take a look at as we take a look at the message of the markets and the bulls and the bears out here, we can see that we can see really the bears started coming out of hibernation right here on January 30th. On January 30th, giving us what's called a dark cloud cover candle out there, getting a little bit of follow through on that next trading session as well, turning that into a nice bearish candle, and then ba-boom, jobs Friday. What do you get? You get a bull sash candle out here. And then what do you get on Monday, that follow-up session? A bear sash candle out there yesterday. Really a doji-like style type of candle, hanging man type of a candle out there. And today, what we've got is a bearish engulfing. Pretty easy to make a bearish engulfing candle today. All that you would need would be a close below yesterday's open. Yesterday's open on the S&P 500, 1511.29, trade out at 1508.77. We can see the bear fight, the bull fight right in front of our eyes out here. Where's the S&P going to pull back to? At least to the 0.382 level. That would be nothing. That would be normal. And the 0.382 level I'm referring to is of the entire move up. I'm talking about the A point that was created on November 16th, all the way up to the B point, which was on December the 18th out there. and the C point, which is December 31st. That A to B equals CD is what completed up at the high. Well, you could use the high of yesterday. You could use high of yesterday was 1514.96 out there. If you go from the low, meaning November 16th, out to yesterday's high, you'll be right in the range of about 1449 or so. That is the first stop on this train on the way down. The market getting into overbought territory. It needs to work its way off, and that would be the first stop. The second stop would be Sweet 618. Sweet 618 will take you basically back to the lows of December 31st. Not exactly, but close enough. 1408 is the actual Sweet 618. 1398 is the entire swing point. That would be the move. That is likely where we will see the markets pull back to. That is on your S&P 500. Let's go take a look at the SPYs. Let's look at the ETFs out here on the SPYs. And the SPYs, folks, the S&P 500 has been pretty darn strong here as of late. However, as I showed in this morning's newsletter, there's some divergence out there that says, says this price, this last move out here isn't real. Isn't real, folks. And that's what you want to understand. If we take a look at the SPYs out here, the SPYs, the first move down is going to be to the 145 level. 145, that makes all the sense in the world. Why? Because that's going to take you all the way back to the breakout low, January 2nd. That is the top. That is the top of the gap, meaning the low of that candle, which is 144.73. So you got 144.73 and 145.03 being the 0.382. That is where the SPYs are going to be moving to. And then closing the gap. Back to Sweet 618, that would be 141.09, the low of that December 31st candle, which is likely where it will come to. Why? Because things go back to breakout areas. Things go back to breakout areas, whether it's equities, whether it's ETFs, whether it's indexes, they go back to breakout areas. The breakout area on December 31st, that low, 139.54. You come back there on less than 243 million shares. You get a nice move down into the oversold condition, which I suspect is that's what we will see, or at least it will move down below that 50% line. And where you want to be buying equities, where you want to be buying a market, is when you get into that oversold. You know, one of the things that is perhaps the most difficult thing to do is to buy when the market is moving down, because you feel like where is it going to stop? Just like one of the hardest things to do is to sell when the market is at highs. Yet when you think about it, if you just step back and you took the emotion out of everything, which you can't because emotion is progress, so I don't want you to really take the emotion out. I want you to use the positive emotion out here. But if your mission is to buy at lows and sell at highs, and Basil Chapman, he'll be up next. He's got a great song for buying at lows and selling at highs. Well, then what you want to do is you want to make sure that you've also added this tool, which is the relative strength indicator, which is a set of tools because you got candles, you got relative strength. Go to the homepage at tfnn.com. I have a free special report out there reading the message of the markets. It'll answer the question, should I be buying or should I be crying? Really, it answers the question, should I be buying or should I be selling? Should I be in or should I be out? And wouldn't you like to be able to answer that question on your own? Wouldn't that empower you? How would you like that for an empowerment of your human potential out there? So go to the homepage at tfnn.com and download that free special report now. It includes 3 videos, and you're going to get 4 follow-up videos that show you how it works on different instruments. Whether that's currencies, if you trade currencies, oh my goodness, you need to be able to use this indicator along. And what you really want to do, and what I'm going to teach you, is how to identify divergent patterns out there. Divergence is where it's all about. That is where you've got the hidden secrets inside these markets and being able to identify turns out there. So let's go take, and we talk about identifying, how about that? When we take a look at these markets, let's go take a look at the currency market out here, because in the currency market inside the euro is where we are seeing the biggest move today. If we take a look at the euro, it's down 120 ticks right now. So let's go over, because here's a great opportunity for us to take a look at the euro and be able to, if you were in this trade, what we can see here, and we're looking at a 30-minute chart on my screen here. Number one, what we're looking at is we are looking at the move here is getting into where? Getting into the extreme oversold territory. However, what is key is you've got to be paying attention to whether or not you've got a bullish or bearish candle. As this, and we pointed this out yesterday, we were taking a look at this exact trade, this exact 30-minute chart, and we're looking at the possibility of this setting up an A to B equals CD down. Looks to me like that is what is unfolding out here. In fact, you got a great sell signal inside the euro. This is going to be one of the special add-on additional reports, emails that go out that show you specifically on this specific trade how to identify a divergent pattern out here. And also I'll be going through a 1-hour workshop. So 1 hour, I'll spend 1 hour with you. That's going to be on February 20th. It was 2 weeks from yesterday. 1 hour on how to be able to use these tools to be able to add to your trading arsenal. And you want to add this to your trading arsenal. Now what you want to do is we take a look at the 1-to-1 A to B equals CD down. Where is it headed to? Is it going to go straight down to it? Well, probably not. But as we take a look at where the 1-to-1 will take you to is 133.438. It's trading out right now 134.098 out here. What it also did, it ran into an area that should have acted as a strong support area. Why do I say that? I say that for a couple reasons. Number one, you're in the extreme oversold levels. If you take a look at RSI readings right now, you're down about 19.6. That's one thing. The second thing is we're just going to look at retracement and expansion areas. Remember, you want to make sure that you're also using expansion and retracement patterns that are out here. And that I'm referring to swing points. So if we take a look at retracement levels on a 30-minute chart, we're going to come down to the level where it first made its turn. The euro I'm referring to, which is at about 8:30 in the morning on January 16th, down at a low of somewhere right around 1.32558 or so. That is your low swing point. You go from that all the way up to the turn that came in here, and this was back at around 11:30 in the morning. Morning on February the 1st out there, as it was making high at the 137 level. From that low to that high, Sweet 618 was right here at 1.34293. That, even though, now with the market moving down here with this wide-ranging bar, that was saying, oh, you know what, maybe instead of a 0.618 retracement, I think maybe I'll go to that 0.786 retracement level. But what else did we have at the same area, almost the same area as that 0.618 level? Well, you had a 1.272 expansion of swing points. What was the expansion? That is, in essence, your B point, your B to C expansion. Your B point on this happens to be the low at 3 a.m., That's at the price point of 1.34573. Your C point on this happens to be the high. It came in at noon on February 5th out at 1.35961. So you had a 618 retracement, a 1.272 expansion that were all lining up with inside its area, all also being in extreme oversold condition. Now, the key here is waiting for the bulls to show up. And the bulls, they can't hide. Why can't they hide? Because they have to show themselves. They have to reveal their cards. This is the greatest game, the greatest business in the world, because you get to look at the cards just as if you were playing a game of blackjack. You get to look at the dealer's cards and decide whether or not you want to take your money off the table. You want to use bullish and bearish candles to make that determination. Thus far on the 30-minute chart, no bulls have really shown up. We can go down and take a look at the 10-minute chart. In fact, I'll do that. But come back, 877-927-6648. We can see no bulls out as well in the euro. Dow is off 76 points. S&P's down 6. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow off 99 points and one ping facility. I think that is the phrase from the Hunt for Red October. That's one of my favorite movies out there. And what does that mean? Well, when we went to break, we were taking a look at the Euro-US dollar, taking a look at, a move down here. And when I say one ping facility, I think that is his name here, what I'm really giving to you is probably one of the best tools that you can use in trading. It will save and make you more money than perhaps anything else out there. And that one ping means, wait, one more bar. One more bar. When you have a trade that sets up and you have to stay inside the platform, the time frame it is that you're trading. If you are trading the Euro-US dollar on a 30-minute chart, then you need to wait that 30-minute bar. If you're doing it on a 10-minute chart, then you can go ahead and do it on and wait one more bar. And what I mean by that is when your pattern sets up, what you want is you want a second opinion. This is your money that's at risk here. If you were going to a physician, wouldn't you like to get a second opinion? Second opinions are normal. And in the marketplace, you pay for a second opinion. If you were going to go to get a second opinion at a physician, you'd likely be charged for the appointment. But what you would have is you'd have a little bit more assurance or confidence. In this case here, from a market standpoint, you want to see the market moving in the direction of your trade. So in this case here, we're taking a look at the 10-minute chart. We just simply step down to the 10-minute chart, see if there are any signals out here, meaning signals, any bulls that arrived here to start pushing the euro up. Because what we do know is the euro is in the oversold territory. At some point in time, someone's going to move in and say this is a buying opportunity. Why? Because you want to buy things when the relative strength, which is really the relative weakness, is down at that 30 or below. But how do you put that together? It's a great question. That's why you want to be aware of candle signals out there. That is because that is the bulls and or bears, and they can't disguise themselves. If you take a look at this, the only time so far in this move down here on a 10-minute chart, and I'm referring to coming off of the high out here at 750, as we see the little bungee jump, as we see the little watershed cascade on a 10-minute chart, this candle right here, this green candle, just because a candle's green doesn't mean it's bullish. That candle at 9:10 this morning was nothing more than the pause button. The pause button, on a VCR. Of course, most of you don't have VCRs anymore. Most of us don't have VCRs anymore. But that was just simply the pause button. I guess it's a pause button on your digital sets these days. Just a pause button, not a bullish candle whatsoever. Nothing to have traded off of at all. You did get a little bullish candle right here at 9:50 a.m. However, one ping facility. If you were trading the euro on a 10-minute chart and you waited one more ping, one more bar, what would you have done? Did the trade start moving in your direction? Absolutely not. Now what we have here, we got another little pause button. That is a little doji here on the 10-minute chart. That came in as we were coming into that 10:20 session. Right now, what do we have here? We've got more leaves falling off of the trees until you get the bulls, and this is how you trade anything out there. Doesn't matter whether it's currencies, doesn't matter whether it's ETFs, doesn't matter whether it's an equity, whatever it is that you might trade, doesn't matter whether it's a commodity. If you utilize all of these tools put together, you'll just simply empower yourself. You will empower your human potential when it comes to trading out there. The markets are continuously providing us with information. And right now, all we've got is just a second doji candle. Hey, that's not too bad. That's a little timeout right there. Of course, we're just coming into it's got another minute and 50 seconds before this candle here gives us any type of signal or potential signal out there. And we'll come back to the 10-minute chart. But that, folks, is how you put it together. Let's go take a look at some of the commodities. Speaking of commodities, let's go take a look at gold. Let's go see what Goldilocks is doing here. Right now, you've got gold trading down, up 90 cents out here, up at $16.79. If we take a look at gold here, you can see this descending tops line. You can see there's really two descending tops lines that I'm using. I've created this little snow cone out here. One is from coming off of the high of 12. That's your touch point. Your next touch point being January 18th out here. This little black descending tops line here is acting, for whatever reason, as a resistance area. You can see it happened last night. It's happened so far this morning, the bottom of which is also this little red line. That's coming off the swing point, coming back into the November 23rd level. That seems to be acting as a support area. It's as easy as that. Gold, neither overbought nor oversold, just kind of has lost its way. A lot of inside bars out here, inside closes. If we go take a look at silver also doing something similar. We can see acting as resistance area, just coming off of the swing point high from November 30th. Use your next touch point being the high from January 23rd out there. A quick peek in on natural gas before we go to this commercial break here. Natural gas looks to me to be setting up the downtrend channel. It is shucking that rising price channel and now into a new downtrend price channel. 877-927-6648. Dow's off 91, S&P's off 8. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Masters Show. The Dow off 99 points right now. You've got Apple's up 60 cents. We're going to take a look at the Apple chart here in just a moment. What we do have is the 30-year Treasury continuous contract up on my screen here. That is up off of the bottoms. It is going to run to at least the descending tops line. That is the red line. Now, beautiful pattern out here on the 30-year Treasury. We're taking a look at a Gartley buy pattern. That is a 0.618 Gartley buy pattern. Has beautiful Fibonacci numbers. Again, we were taking a look at the 30-minute chart on the euro. And on the 30-minute chart, we were looking at really the same type of Fibonacci relationship. And that Fibonacci relationship was a 0.618 retracement and a 1.272 expansion. The expansion was an expansion of the B to C swing point. The 618 level was nothing more than from the lows, from the swing point lows all the way up to the highs that were put in. Natural areas of either support or resistance. Just depends on which direction it is that you're taking a look at it. You can see how when the 1.272, but now this is a leading indicator pattern. So you were able to draw this pattern in advance of bonds getting to that price point. How would you do that? Well, it's pretty easy because the market has done, in essence, most of the work for you. All you have to do is identify the swing point highs and lows. That's easy to do. In this case here, to have drawn that pattern in advance, you would have just simply come down to the swing point of March 19th out at the 135.05 level, all the way up to the swing point high on July 25th, which was out at 153.110. If you use your retracement ruler, which I'll do, I'll go ahead and actually put it up on my screen here, and then I'll go ahead and erase it. And my retracement ruler has the following levels on it. I've got several of these, but one of the sets has the following levels: 0.382, 0.618, and 0.786. Those are the levels I want to take a look at. 0.382, just really to help me to understand, is that where the dead cat bounces, where the normal bounces or move is going to be, and if it stops there and the bulls show up, you've got a real strong trending market. 0.618, 0.786, nothing more than just normal reversals. So you can see 142.045 happens to be the number. Just happens to be that 142.045 was the exact retracement. How that works, I don't know, but it does. And then what you're taking a look at is expansions of swing points. In this case here, all you had to do was wait for that B to C leg to form. And when you take a look at that B to C leg, you also have expansions. I have the 1.272, 1.618, 2.0, 2.618 expansions on there. And what we can see is coming in at that area was an expansion and a contraction. Knowing how to expect that in advance would have helped you if you were in the trade. If you were bearish in the trade, you would know that that's going to be a strong area of support. Now, what do you wait for? One ping facility. So you already know that's the advance, that's the leading indicator. You're waiting for some type of bullish confirmation, some type of bullish candle. And that is what took place on February the 4th. Gave you a bullish engulfing candle coming into a leading indicator. To me, that was the signal, that was one of the signals to go ahead and take a long position in bonds out there. Bonds now traveling above that Basil's walk on the 9-period EMA, the walk of fire out there. We'll see if it closes above it. That 9-period EMA right now, which has acted as a resistance point, perhaps now it will become support. That level 143.22, and where bonds should travel to, because they have in the past, is that descending tops line. That's going to be the next release of information. That is this red diagonal line coming off of the high from November 16th. Your next touch point, well, it can be, I just simply used, I believe, the December 31st level. Why? Because December 31st is such a key swing point in the marketplace. So, which really is touching the highs as well as the November 28th. But when you're taking a look at some of these points where you're points of contact, it's ideal for you to be able to take a look at things that make sense and line up with each other. So bonds on their way up into at least the descending tops line. Perhaps, though, breaking through the descending tops line, what bonds will do is they'll run all the way up to horizontal resistance. And which is more important? Which has more strength? Horizontal or angular? Or diagonal, I guess. And it's horizontal. So the real resistance on bonds are going to be the gap down from January 2nd, and that high is 146.1. If it can break that red diagonal line, that is where bonds will head to. Speaking of resistance, let's go peek in on Apple. Apple's up $1.18 right now. What Apple did yesterday was it's the first test of the resistance area. The resistance area I'm referring to is the downdraft, is the gap down from January 24th out there. That high, 465.73, 52 million shares. Yesterday was the first day of that test. It got over that area. Did it intraday. In fact, did it shortly after Mark from the Boston area had called in and we were taking a look at Apple as I was getting off the air. Apple yesterday getting up to a high of 466.50, gets over the gap down swing point, does it on 21 million shares, closes below. Now setting up your first point of contact as a resistance area. What with Apple, with any kind of resistance area or any kind of support area, the more contacts you have, the stronger it becomes. Is one point of contact strong? No. But now you at least have your first test. It's stronger than none. One is always stronger than none. 2 or 3, if you get 3 points of contact and you get resistance, that is really setting up that all that Apple is doing is working off the oversold condition, which it has to do, which it should do, before it gets the energy built up to complete its move down, to complete its A to B equals CD pattern, which is likely in the 395 to 341 level out there. Our call-in number is 877-927-6648. Excuse me, I need a sip of water. Okay, back at you. Now let's go take a look at some of the, let's see, what have we not looked at here? We looked at bonds. Let's take a look at light sweet crude. Light sweet crude pushed down yesterday, pushed down nicely, down to a low of 95.04. Pushed down, and the bulls stepped in. So here, I'll teach you something. Do you want to know why the bull stepped in? On the daily chart, you can take a look at it. It's not even close to being oversold. It was coming off of an overbought territory, and it made its high back here on the 30th of January. Nice little bearish engulfing candle on that following session. You didn't get really any follow through here on the session after that on February 1st out there, but you most certainly did on February 4th, a couple trading sessions ago. Pushes down yesterday. And why was it pushing? Why did it get reversed? Oh, pretty simple. How about we just simply come down to a 30-minute chart? Let's come down to a 30-minute chart. In essence, same chart we're looking at. If we're taking a look at yesterday's trading action coming into the 9 o'clock hour, where is it that price was moving to on the 30-minute chart? That's right. Moved right into being oversold. Not just oversold. Let's call it extreme oversold. It gets down to a reading of 13.2 out there. And then what happens? The bull showed up. And how did the bull show up? How do we know the bull showed up? Wasn't because it was a green candle. It was because it was a bullish reversal candle out there. That's what happened. You got confirmation as well on that next candle, working its way out of being oversold. And where did it move up to? As it made its high coming into 12 noon, got into where? Got into being very close to being overbought. How does it work that off? It works that off by just simply traveling sideways. Folks, utilize these indicators. Go to the homepage of TFNN.com. If you have not already, download that free report. Please do it. You want to add these tools to your arsenal in trading. It'll help you answer the questions why. Also, if you're in the trade from a longer-term standpoint, you just want to know what's going on and what to expect in the shorter term. Doesn't change your longer-term outlook, or it shouldn't trade it. The question should be, is there anything that changed when you entered the trade on the time frame that you were trading in that would have you get out of the marketplace? And if the answer is no, you stay in it. But instead, what you have is you have the EKG of the bulls and bears. And it's really shown to you by utilizing, that's all that this RSI is. It's nothing more than the EKG. And it tells you when it's going to take a deep breath out and when it's going to take a deep breath in. As we go take a look at deep breaths, let's go back in and take a look at some of the indexes out here. Let's go see what kind of candles we've got forming. We can see here on the S&P now, because of where it is down at the 1501 level, not only was it a bearish engulfing, if it closes right around here, 1500, 1501, you'll now have an evening star pattern. So now you've got this 1.272 butterfly. You've got the bears clearly out of hibernation. Even though there's going to be a blast of snow up in the northeast, the bears are clearly out of hibernation and truly setting up a very defensible position here. The more that this moves, the more that this, yes, it works off the overbought condition out here, but it's setting up that 15, 14-ish range as a very strong resistance area. Today's candle looks like a combination of both a bearish engulfing as well as an evening star candle. That is on your S&P. Let's go take a look at the big dog. Let's go take a look at the Dow Jones Industrial Average. Let's go ahead and pull that stock chart up. As well as we take a look at the Dow, we know the Dow also making a 1.272 butterfly pattern, but more importantly, really making a perfect. This one is textbook. This one goes in the next textbook for sure. This is a 3 drive to a top pattern. So you got multiple patterns completing as we came into Jobs Friday, as the Dow was making its high. The Dow also today making the same thing that we took a look at on the S&P just a moment ago, bearish engulfing and evening star after having this little dark cloud cover on February the 4th out there, as well as on the 30th. So the bears are absolutely out in full force. There is a battle that clearly is going on. If we go take a look at, let's go take a look at the New York Stock Exchange. Of course, how can we leave the New York Stock Exchange out of this mix? And we're going to take a look at the New York Stock Exchange because that has the bearish of bearish candles out there. And that's that island reversal. Let me see, where is that stock chart here? So that island is still intact. That island reversal, very significant. What do we have going today? You've got the bear sash candle in play right now. So you got this little island out here. That is in play, says the New York Stock Exchange, which has been the strength. That is what is a truly a leading indicator out here. What you are looking at is 85.39 is the first stop, and that's logical. most logical because really the breakout or the low of January 2nd happens to be 85.71. So 85.39, 85.71, that's going to be the first stop on the New York Stock Exchange, with stop number 2 really below that 0.618 level. That's at 82.72. However, the low of December 31st out there is 82.98.36. So, again, the bulls and bears, the bears are truly out today. It's early in the trading session. If we go peek in on the ETFs out here, let's go see what we've got. Let's take a look at some of the volume that we have inside the marketplace, inside the SPYs right now. SPYs volume so far, 37 million shares in an hour and 15 minutes of trading. So that's not too bad. That takes you into about 180, 190 or so to the downside if that volume were to continue. Of course, we know we had 158 million shares to the downside, and to the upside 113 million shares on February 5th. So volume now moving to the downside. The candle on the SPYs out here, hold on, I think I lost the candle out here. Let me refresh my screen. Where is it? No, let's go. I didn't lose it. So you've got bearish candle today as well. Let's go take a look at the diamonds. Let's see what we have on the diamonds out here. As we take a look at the diamonds, trading out right now 138.48. You can also see the patterns, 1.272 pattern out there. You got a little shooting star candle. Of course, this is the second shooting star candle. Why does it keep doing that? It did have a shooting star candle out here on February the 5th. But let's take a look at volume. That's really why we came over here. 2.4 million shares to the downside. It did 6 million shares on February 4th. So it is coming down into that February 4th swing point with more velocity, with more volume as we speak right now, at least during the first hour and 15 minutes of trading out here. Let's go take a look at the Qs. Okay, the Qs here, this probably is where we get the signal today, or whether it's today, tomorrow, or some point. Here's where we're really going to get the signal. So what we know about the Qs, been trading sideways for about 25, 26 sessions out here. The Qs need to bust through the low of January 2nd. That's got 70 million shares. 66.48 is the number. What we do know about the Qs is it came down with light volume a few trading sessions ago. 48 million shares as it last attacked that area. Today so far, you've got the Qs doing 12.8 million shares. Let's actually go into the 10-minute chart. And let's see what the 10-minute chart, because volume, probably is dissipating or should be dissipating right now. But let's go see if, in fact, that really is the case. Let's refresh my screen here. Just make sure we've got the good volume pattern out here. Just takes a second for this to refresh itself. There we go. So as we take a look at volume, you can see certainly the majority of the volume actually coming in at that 10:30 session out here, doing 6.6 million shares to the downside. Let's go to Mike in Lakeland. Mike, thanks for calling. Thanks for holding. How are you today?
Good morning, Steve, and thanks for everything you do. You do work very, very hard. And I may have given you a hard time in the past over some stuff, and I apologize for that. You do work very hard. And,
no problem. No problem. I don't carry anything with me, so no problems.
No problem. I have a lot of empathy. I was going to have to look at the QQQs, but I've watched you now. I've watched you for months and do these butterflies, I guess, and you've made a believer out of me. What I don't understand, and I can't see it as close, and maybe I need to subscribe, on the butterflies, I'm familiar with the Fibonacci's, but I don't understand the measurements you're making off these butterflies. I can't quite see them, and I don't understand it.
All right. When we come back from this. Yep, when we come back from this break, Mike, I'll answer that question for you. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Great moments are born from great opportunity, and that's what you have here. The opportunity to answer the questions, should I buy or should I sell? Should I be in or should I be out? Hi, I'm Steve Rhodes with TFNN, and I produced a free report, Reading the Message of the Markets, where I'll teach you how to use a set of tools that will answer these questions. Go to the homepage of TFNN.com right now and download Reading the Message of the Markets. This free special report includes step-by-step video examples that would have had you out of the market before the crash of 1929, before the crash of 1987, and would have had you back in the markets buying at the bottoms. This set of tools works on all time frames and all instruments. This set of tools will shape your trading and investing future. Folks, this moment will never be here again. The only cost is not taking action. You were born to be a money master, and the time is now. Go to the homepage of TFNN.com and order Reading the Message of the Markets.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Master Show, folks. Right now, the Dow down 122, composite off 32, and the key area here to be watching is going to be that 1491.25 on the ES Mini. Now, I've got the 30-minute chart back up on the screen here, and you can see it's pushing down into the area of 1491.25. It's at 1496. Why is that important? And it's also oversold right now. So the bulls have defended this position. They've defended it well. And that position I'm referring to is the hammer candle, which is right from the session of 10:30 in the morning from January 28, 2013. 1491.25. The volume there, and you want to be paying attention to the volume. We're intraday here. 311,000 shares there. You start coming down into that area, and right now it's coming down the light. So I suspect that what we will see is that is the spot where you will see the bulls step in and defend that territory. They have 3 times thus far, with the market moving down into that oversold territory. No reason for the bulls not to step in. If they don't, though, and you get a close below that hammer, and That could take place overnight. It could not take place at all, but that's an important area to watch. Now let's go back to Mike in Lakeland, and what I'm going to do is try to help you in the next 3 minutes here, help you understand, expansions of swing points and so forth. But let's use, instead of the Qs, let's use something like either the S&P 500 or the SPYs. Which of those two?
Sure.
Which would you rather look at?
Whichever. And I was just only going to mention on the Qs for later that it would have an awesome head and shoulders weekly, but I definitely wanted to hear about the explanation on the butterfly. So whichever one works for you.
Yeah. Okay. So we'll pull up. Let's see what pops up on my screen. Actually, we'll take a look at the. At the New York Stock Exchange. Why don't we take a look at that? Not everybody has access to that. So let me just switch over here real quickly. Okay. To take a look at we'll take a look at the Dow. And so as we take a look at the Dow, so the expansion piece of it, the expansion piece you're using in the case of the Dow for the most recent butterfly, you're using the high of September 14th. So in the Dow, that's going to be 13,653. That's your major swing point. It could be October 5th as well. So either one actually works, Mike. Now, when I take a look at the swing point where you're going to measure your expansion off of, it's going to be off that November 16th level. So if your trading application didn't have an expansion application, if you just simply subtracted the high from the low and took that difference and multiplied times 1.272, you would be adding that to the bottom. And that is an expansion of swing points. Do you follow along with that or no?
I do. Yes, I do. Yes,
okay.
I do.
And so if you do have a Fibonacci ruler, whatever might be on your trading application, what's nice about this, if this level fails, and I'm not saying that it's not going to fail. Right now you've got the Bears in charge today. That can change at any point in time. If this level fails, where it will move to likely is going to be the 1.618 level. And the 1.618 level, you would still be using the same set of swing points. You would still use that September 14th down to the November 16th level, and that says 14,383 would be the mark where it would move to. And that's you're using major swing points. In the case of the SPYs out here, the SPYs, and I'll cover this tomorrow during tomorrow's show, is that when a .786 Gartley fails, that oftentimes turns into a butterfly. And I believe if we go back and we take a look at the SPYs, we'll see where there was at least a .618 butterfly, or Gartley cell pattern, and that failed, and that actually turned into the butterfly pattern. So I'll do that for you tomorrow, or just call back in on the show.
Okay.
And, there's more time in that third segment at the bottom half of the hour. All right?
All right. Thank you, Steve.
You bet. Have a nice day. Hey, folks, stay tuned. Basil Chapman is up next, and it's Thursdays. That means Larry Pesavento, Fowles, Basil, then Darryl Martin, David White, Ken Shreve, the Tom O'Brien Show from 4 to 6. Thanks so much for being here, folks. Have a fantastic day. I look forward to seeing you in the
morning. Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.